Hello traders and welcome to another video review. Today is Monday, the 15th of the March 2021. This is the beginning of the trading week, so let's take a look at the economic calendar. As you can see, there isn't much important data to be published today, but we got some data from China. They were released, of course, overnight, and they were like fixed asset investment, industrial production, retail sales, and unemployment rate. As you can see, the fixed asset investment is deteriorating from 2.9% to 35%, but it's still below the forecast of 40%, which is why it's deteriorating. Industrial production is better than expected. It jumped from 7.3% to 35%. It's better than a forecast of 31. Retail sales are better as well, and of course unemployment rate, well, it's better than the forecast, 5.2%, but it's actually rising, so it's not that good anymore. So that was an interesting bunch of data from China. During the London session, we got on a wholesale price index data scheduled for release at 8 o'clock. They were actually released already. As you can see, they were better than expected, 1.4% versus 0.7%, but still worse than February, January reading of 2.1%. New York session. What do we have in the New York session? Not much data here on the Monday. We got some data from Canada, housing starts, manufacturing shipment. We got New York Fed Empire State Manufacturing Index, but all of those data don't have too much impact on the market. So maybe today we will take a look at the gold because it's directly involved with China, of course, and crude oil, and maybe some other cryptocurrencies like Bitcoin and Ethereum. So let's take a look here at the spot gold chart, daily time frame, Japanese candlesticks. This is what I'm using, and as you can see, recently we got this dip towards 61% of the whole move up. As you remember, this is the move up, right? This is our range on the gold, support, resistance, red and green line. We got this dip towards 61%, 1689. As you can see, the low was made at 1676, just above the 1672, the lows from the 2020, the middle of the 2020, from the June. So we got a bounce, but as you can see, this bounce doesn't really help bulls at all. Why? Because the market is still trading below this blue trend line, right? So we are, as you can see, around the level of 1700, let's say 24, okay? And in order to trade up more significantly, of course, we have to, let me just remove this 50% level so we have a clear picture. There you go. In order to go higher, we need to break first above the trend line, and then, as you can see, we got this technical resistance from lows of the December 2020 and the lows of the 2021, the end of the February. So those levels has been hit twice, 1766. That's the first thing. Second thing is we have 1 and 2 touches of the trend line. If we will break above this trend line, then of course we need to break above 1766. So that's the second reason why it's not that good. And the third reason is the immediate technical resistance, 1739, the high of the 11th of the March 2021. As you can see, this is kind of a interesting candle as well. Looks like a shooting star, something like this, after this very short rally up. So right now it's nice to think that bulls might have some kind of a good position to start the bounce because they hit 61% of the Fibonacci retracement, fine, but we are still trading below the line, below the main technical resistance. We can even do some kind of a very, very narrow range here. As you can see, the bigger range is here. This is the key game-changing zone. Two blue arrows here, yeah, they are indicating that we need to break above 1965 and 1990 in order to rally way higher, in order to resume the uptrend, really, right? Well, right now the bulls have a problem to break through the trend line, break above the technical resistance. So despite the fact that we are trending well somewhere around the oversold market conditions, the RSI is on 40. This is still not enough for the bulls to rally up. So maybe if we won't break above this blue line and the technical resistance, the market will turn down. Maybe it will consolidate for few days and then will turn down and then deepen the correction. But in that situation, if we dip below 1689, 61% of the Fibonacci retracement, this is wrong, and this is bad for bulls again, because we will penetrate lower price levels. So crude oil, daily time frame chart, current month. What do we have here? The first thing is our zone 75.19, 76.55 violated, new high. We got a new high here made at the level of 68. I guess this is 67.97. 67.97. Let me just put it on the chart. 67.97. There you go. This is our top. As you can see, very interesting candle were made on this top. So please keep an eye on this level. I will just extend the channel because I'm doing nothing with this channel right now. I'm just extending it. What we might do apparently is to lower it somewhere here, for example, and adjust it like this. So that will be our high of the reference, right? So we got this attempt to rally above the channel, but as you can see, we are very quickly resumed back to the channel. The other thing is, as you can see, we are still in the uptrend, but this is clearly some kind of a bearish divergence between the price and the momentum indicator. So please keep an eye on the current developments on the oil. The key technical short-term support is 63.86. This is the key technical support. If we break below this level, we will likely penetrate the level of $60 per barrel. So right now the uptrend is still valid. We are trending inside of this channel. There is no sign of any kind of trend reversal except this one, which might be just a false breakout above the channel. So we cannot treat it as a 100% sign of the trend reversal. And we retraced almost well, more than half anyway of the last move down. So we can say that we retraced already over, let's just take a look, 61%. Yes, we traced already 61% of the last move down. So it's a kind of a strong bounce. If we break below 66.54, we are again going up towards the highs of $67.97. So interesting situation on the crude oil. And now the Bitcoin. Why I'm talking about the Bitcoin? Because we have made another higher high, which means this scenario is now invalidated. So what is going on? This is still wave 5, right? We thought that the wave 5 had been completed here. ABC correction to the downside. No, it looks like we got the wave 1 somewhere here, wave 2 somewhere here, 1, 2, 3, 4, 5 waves to the upside. Wave 3 This was the wave 4, and we are completing the wave 5 according to my simplified Elliott wave scenario. And as you can see, the trend is still up. One thing that worries me about the current higher highs and higher lows is that we are persistently making lower highs on the RSI while we are making higher highs in the price. So we have another bearish divergence on Bitcoin on a daily time frame chart, and sooner or later we will have again 26% of a correction, or maybe even more, because if this is wave 3, if this is wave 4, we are waiting for the wave 5 to finally complete, and then it will be terminated. What can happen is very nasty looking correction to the downside, because it will be a brand new cycle on the Bitcoin. When it will happen, I don't know yet. I'm just following this market to see what is recently going on. Oops, excuse me, I didn't meant to take this one. Yes, this is what I wanted. I will just read the market and wait for some clues. Important 50% Fibonacci retracement for the highs of 61,652, new all-time high, and the 50% is 52,483. As you can see, it's a technical support, kind of a technical support as well. Please keep an eye on this level, and of course 61% is right at the level of 50,233. So if we break below this zone, let's say zone or Fibonacci retracements, two of them, then of course we will go lower towards 41%. First lows of the February, then eventually 41%. But the uptrend is still intact. We are in the last wave up, wave 5th. Please be careful with your longs. And please notice the fact that if we are starting to break lower basically, and Bitcoin will start to break down in a very quick and quick manner, there will be sharp waves like here, more than 25-26%, right? Then we can say straight on there might be some sort of the correction going on the Bitcoin. So please keep an eye on this, and I hope I see you guys tomorrow with the new Forex calendar reading, and of course new technical reading for the various Forex pairs. So that's everything for me for the Monday. Happy trading, have a good trading week, and I hope I see you guys tomorrow. Bye bye.